Welcome to The Explainer from Talk Tickers. Today, we're digging into KB Home's fourth quarter 2025 earnings, and this one is a really interesting case study. On the surface, it looked like a pretty solid win, but the market saw something different. So we're going to break down this classic story of a headline beat that was really just hiding some serious pressures under the hood.
So here's the setup. On paper, KB Home absolutely beat expectations. But then you look at the market's reaction, right? The stock took a dive, down almost 5% after the call. So what in the world did investors see that completely soured that initial good news? Okay, let's dive in and unpack this.
All right, so first up, let's talk about those headline numbers, the ones that got everyone's attention right out of the gate. First up, adjusted earnings per share. They came in at $1.92. Now that handily beat the Wall Street consensus of $1.79. I mean, that's a solid 7.3% surprise to the upside. Not bad at all.
And it wasn't just earnings. Revenue also came in hot at $1.69 billion for the quarter. Again, that's ahead of what analysts were expecting.
So naturally, management was pretty happy to frame this as a big success. The CEO even highlighted how they met or, exceeded pretty much all of their financial targets. But, and this is a big but, this is exactly where the simple, happy story ends. Because right under the surface, the market's real concerns were starting to bubble up. Okay, so this brings us to the heart of the matter. The market basically ignored those headline beats and zoomed right in on one critical thing: profitability. Yeah, the margin numbers, they tell the real story here.
And wow, this chart right here, it just lays it all out. Adjusted housing gross margin fell by a whopping 310 basis points. And just so we're all on the same page, that's a full 3.1 percentage points year over year. I mean, look at that drop from almost 21% all the way down to 17%. That is a huge contraction. You just can't ignore a number like that, and frankly, it's the #1 reason the stock sold off.
So what happened? Well, during the call, management pointed to a whole cocktail of reasons for this squeeze. They talked about general pricing pressure, of course. Then there was the loss of leverage from just having lower revenues. And a big one was that they had to push to clear out older, more expensive spec inventory. Those are the homes they build without a buyer already lined up. On top of all that, you had higher land costs and an unfavorable mix of what and where they were selling.
And this is the real kicker. The pain isn't over. Their own guidance, what they're telling investors to expect for the next quarter, points to margins getting squeezed even more. They're guiding for a range of just 15.4 to 16%. And that right there, that confirmed the market's biggest fear, that the Q4 weakness wasn't some fluke. It was the beginning of a trend.
So the big question is, how are they going to fix this mess? Well, management laid out a pretty clear strategy to get margins back on track, and it all comes down to getting back to their roots, their built-to-order playbook.
And their whole game plan is built around this one crucial insight from the COO. Basically, their custom built-to-order homes, the ones where a buyer is involved from the start, are way more profitable. We're talking 3 to 5 full percentage points higher margins than when they sell a spec home off the lot. And that just makes sense, right? You've got less risk and a lot more pricing power when you already have a committed buyer. So this is their path back to a healthier bottom line. So the plan itself has a few key steps. First, they've got to shift their sales mix back towards those BTO homes. Right now, it's at 57%, and they want to get that back up to their historical level of over 70%. To get there, they're going to leverage faster build times, open up new communities that are really focused on this BTO model, and just plain build fewer spec homes that compete with their own custom orders.
Now, if you look at their full-year guidance, you can really see this transition playing out. Just look at how wide those ranges are for revenue and deliveries. I mean, there's a $1 billion gap in the revenue guidance. What that tells you is that this is going to be a year of major realignment. Their success, or failure, is going to depend almost completely on how well they pull off this pivot back to built-to-order.
So, after all that, what does this actually mean for the stock? Well, that brings us to the next call. This is where we break down what to watch for and give you our rating on the company. And here it is, the big question on every investor's mind right now. Is KB Home a buy, a sell, or a hold? Is this margin problem a reason to run for the hills, or is this BTO turnaround plan a golden opportunity to buy in? We really see a clear tug of war here between the good and the bad. On the one hand, the potential catalysts are legit. If they pull off this BTO shift, it could expand margins in a big way. Plus, they're being pretty aggressive with share buybacks, which is always nice to see. But on the other hand, the risks are just as real. It all comes down to execution, and they're trying to do this in a really tough macroeconomic environment with high rates and affordability issues. So, when we weigh all of that, Our call is a market perform rating. At its current price, the risk and the potential reward just feel pretty balanced to us.
Here's our thinking. We believe the stock is probably going to trade right in line with the rest of the home builder sector, at least until we see some cold, hard proof that this BTO strategy is actually working and turning that margin trend around. So the bull case is simple. The plan works and they look like heroes. The bear case? The headwinds are just too strong and the risk of messing up the execution in this tough market is just too high.
When you really boil it all down, this whole thing feels like a race against time. KB Home has a clear playbook for sure, but it puts an incredible amount of pressure on them to execute flawlessly over the next few quarters. So the final thought we'll leave you with is this. Can KB Home actually rebuild its margin profile before the next housing downturn really hits?
And as always, remember, this is not financial advice.